Thank you all very much for your time today and for joining me. We will, my name is Patrick Barron. I'm the CEO of Ambisafe Financial, and we are headquartered here in San Francisco. What I'll do is that I'm going to talk with you a little bit about who we are, what we do, and also answer any questions that you have about initial coin offerings. It's an open forum. Please feel free to ask any questions that you have. But to start out, a little bit of background. Ambisafe Group is headquartered in San Francisco. We started originally as a web wallet provider, and we very quickly started getting asked a lot of questions around ICOs and ICO services. So we created Ambisafe Financial, which is a full-service ICO company. We help take companies through the ICO process. We start by doing a due diligence report. We do a deep dive into the project, see where it's at, see where the team is, see where the technology is. From there, we assign a project manager, somebody who's done this before, and they're your primary point of contact. They are responsible for advising on tokenomics, governance best practices, making introductions, these types of things. We help with the white paper. We help with the go-to-market strategy. We will make a lot of introductions to legal firms. We make introductions to escrow agents, to potential advisors. We also will help with all the technology. So this includes the landing page telling the story of the project, what it represents, what the token represents, and we will help sell the token as well. So we write the smart contract, we issue it on the Ethereum blockchain, and then we'll either sell it through the white label web wallets, or we sell it through our decentralized exchange, which is called orderbook.io. It's both a primary and a secondary market. So we've launched over 15 ICOs to date. Well, before we get into that, quick disclaimer: I'm not a lawyer and I'm not a financial advisor, and so nothing that I say today should be construed as legal or financial advice. But getting back to the matter at hand here. These are some of the successful projects that we've done. We raised $15 million for Poppy. Very recently, they launched a utility token, conducted the first commercial transaction on the blockchain. Michael Arrington, the founder of TechCrunch, he purchased a apartment in Ukraine, and the title and the currency transferred in one transaction. That was a world first. We helped raise $32 million for Polybius, which is the next wave of banking. We also raised $1 million for TaaS.fund, and they've done some really amazing things, including being the very first company to issue a dividend through a smart contract directly to the token holder's wallet. That was some technology that we built for them. So we not only, we're part incubator, we do help clients build their technology out. We think of ourselves as an engineering team as opposed to a CTO, but we do take projects all the way through from start to finish. So that is who we are, and so we've launched over 15 ICOs. We've built a number of products on the Ethereum blockchain, and enough about us. So what I'm going to do first is I'm going to talk about the different types of tokens that you may see or that you may be considering launching. I'm also going to talk about different things that you need to take into consideration. We'll run through some frequently asked questions, and then any questions that you have, it's an open forum. So from a high level, there are really utility tokens and security tokens. Now, within this, you can really branch it out into a number of different directions, but utility tokens are either functional or they're functional. What I mean by that is, can you use the token? Can you plug it into a software platform? Can you perform work with it? A utility token is, if you're familiar with Ether, Ether is a utility token. It's probably the most apparent example of what a utility token is. What I mean by that is that in order to conduct any type of work on the Ethereum blockchain, you have to use the native token. You can think of it as like going into a casino, and before you can sit down at the poker table or the slot machine or the craps table, you have to exchange your fiat currency, either your US dollars or your euros or your pounds, for the native currency that the the casino accepts. And so you trade in your dollars, you get their chips, and then you can play on their platform. In the same way, a utility token has a lot of similarities to that, and that if you want to conduct any type of work on a platform, you're going to have to get the native currency. So storage is a great example. This is an application that's built on top of the Ethereum blockchain. It's peer-to-peer file storage. If you want to rent out the extra hard drive on your computer, you can do so, and you get paid in the storage coin. In the same way, if you're a corporation and you need space, you can go to Dropbox, you can go to Google, you can go to Amazon, or you can go to storage and you can rent out from other people. So it's peer-to-peer. In order to rent out that space, native token. And so what's most important about utility tokens is that they create a circular economy or a closed loop economy. A two-sided marketplace exists for this token in the storage example. So that is, there's people who need to acquire them. That would be the corporation in my example. And then there are others who want to give the token away or sell the token and liquidate their token. Those would be the people who are renting out their hard drive. So here we have a full closed loop economy or a circular economy. The term circular economy actually is a biology term, and it refers to ecosystems that have zero waste. There's some really interesting literature on circular economies, and if you want to understand how this technology relates to that type of environments that we see in biology, I'd encourage you to read up on circular economies. Now, a utility token, it's pretty easy to sell utility tokens. These are, there's from a standpoint of considerations that you need to take into account. Utility tokens are most interesting to the crypto community at large. Now, a lot of the tokens before the platform gets built, they are pre-functional tokens. They are pre-functional utility tokens. That is, they're selling essentially a placeholder. They're saying that this token that we're giving you represents a future token on a protocol or on a platform that we are going to that we are eventually going to build. Some examples of this: EOS, Filecoin. Both of these are placeholders. So if you participated in either of those ICOs, then you would have a pre-functional utility token. Our policy here in the United States, where we're based, our policy within our organization is that a pre-functional utility token is a security until it has a usability, until you can plug it into a platform. Our policy is to classify those as a security. Now, once it becomes a functioning utility token, there's a very strong argument that it is no longer a security as viewed by the regulators. Now, there are also pure securities tokens. So you can represent equity in a company. For example, the state of Delaware recognizes blockchain-based shares. So we have the ability to incorporate a company in the state of Delaware. In the articles of incorporation, you put that 100% of the shares of this company can be found at smart contract XYZ, and you plug in the smart contract where that token has been created. Then if you want to see who owns the corporation, you can go to that smart contract using a blockchain explorer like Etherscan, for example, and you can see all of the wallet addresses or addresses on the Ethereum blockchain of who owns these tokens. So it's really important to understand that these tokens can be used to assign meaning. This meaning has to be recognized by law if it's going to be of value. For example, the shares in Delaware. And to unpack that a little bit more, I mentioned earlier that Proppy recently was the first company to transfer title on the blockchain. Now, there was one token that represented the title to a particular apartment, and the government of Ukraine recognized this as the legitimate title holder. The United States government doesn't currently recognize title, real estate title, as recognize it on the blockchain. You still have to file paper title in a county recorder's office, for example. Eventually, our government, the US government, will recognize it. More governments around the world are starting to recognize that. And then you can assign the meaning of this particular address, this particular token. You can assign that meaning as ownership of the title, and it can link to a PDF file that shows the real estate, the signatures, all of the important information. Other types of securities tokens that we see include collective investment schemes, such as a hedge fund or a VC fund or a real estate investment trust. There are many different types of collective investment schemes, and a very important point here is that if a token represents a security, just because it's on the blockchain doesn't mean that you can ignore securities laws. In fact, it's the exact opposite. If a token is a security, you have to take into consideration the securities laws of not only the country where you are, but also every country where the holders of your tokens are. And you need to make sure that you are in compliance with all of the rules and regulations. Other types of security tokens include debentures or loan obligations. So you can issue a bond, you can issue credit, you can issue any type of loan, and you can track this through the blockchain. What's really, really interesting about this is that with going back to the equity example and the state of blockchain-based shares, private companies are, what we can do is that we can write into the smart contract vesting schedules. We can write into the smart contract parameters where only verified employees can buy and sell the token. So this really changes the way that a private company, a startup, for example, deals with their employees, deals with their outside investors. It has control over where a token can go based on the parameters that are written into the smart contract. And you can also do things like write the vesting schedule in so that you have something tangible. If I'm an employee and after 6 months I get 25% of my equity that's owned to me, I can log into my wallet and I can see that the tokens were sent to me. And then every month thereafter you can see it. It really changes the setup as opposed to having a centralized system where there's one CFO who has a spreadsheet somewhere. Maybe you have access to it, maybe you don't. And it removes any question around who owns what equity. You don't need a broker. Technically, it's from a technology perspective. Now, maybe not from a legal perspective, but you don't have to go through the same intermediaries in order to access this market. Now, if there are rules and laws in place that say that you have to do these things, then there are rules and laws in place and you have to follow them. But from a pure technology perspective, you don't necessarily need all of the same middlemen and middlewomen that are extracting fees and creating friction. You also don't need central repositories to keep track of stock certificates. The blockchain becomes the cap table ledger of truth. I am very bullish on securities tokens. I think that we're going to see all equity tracked on the blockchain, hopefully on the Ethereum blockchain, and hopefully eventually it'll all be traded on ICO. But regardless, this is the future of how these things are created, and it really opens up a massive user base. So think about it. If you have access to the internet and you can obtain some cryptocurrency, then you theoretically have the ability to participate in the world economy and the world financial markets in a way that you never have before, right? There are so many barriers to entry to participate in all of these financial products that we have. So you can be an entrepreneur in sub-Saharan Africa, and if you have a smartphone and you have the ability to access the internet, then you can access all of these capital raising facilities. You can access all of these amazing tools. At least you will be able to, thanks to this. So my belief is that this technology is going to bring financial inclusion to billions of people around the world. It's going to change the way that finance is done, and we're starting to see that happen as of today. So what you need to know. The basics is that first off, you need legal counsel, you need an attorney, and you're gonna need a lawyer. Now, of course, these are all the same things, and I just want to drive home the point that ICOs and tokens and blockchain technology are very much in the crosshairs of regulators worldwide. And if you're going to launch a business, if you're going to launch an ICO, if you're going to dive into this in any way, if you're going to participate, you need good advice. You need good advisors. We work with a firm here in San Francisco called Gagne Margosian. I believe that Christina Gagne is doing a presentation, I think, right after me. I strongly recommend that you find good legal counsel. That should be your first hire after you find a CTO. You need good legal counsel, because if you do this wrong, you're opening up a huge liability. So absolutely find good legal counsel. That's my first bit of advice. Now, ICOs can be very simple. They are, there's really not that much to it when it comes down to it. There's really, you can launch it with as little as a website, a smart contract, and a white paper. I mean, technically, I guess you could just do it with a smart contract. You just launch the smart contract is a ledger on the main Ethereum blockchain. So let me talk about that for a second. So the Ethereum blockchain is run by a proof of work consensus mechanism where you have miners expending electricity to verify all the transactions and secure the network. Within there, you can create another ledger, which is just it's just a ledger of who owns what. You create a smart contract that you set the monetary policy for, so you can decide how many tokens are issued, how divisible it is. You can decide whether or not the tokens can be reissued. You decide whether or not it's inflationary, deflationary. The world is your oyster. You can decide however this token is going to operate. And by doing this and selling these tokens, you've launched an initial coin offering. So it's really that simple when it comes down to it. Now, the most interesting ones are coins that are doing something that hasn't been done before, such as the distributed file storage or distributed computing resources, or facilitating a two-sided marketplace for trading of bandwidth, or there are thousands of really interesting use cases of new networks and new economies that didn't exist before. And the beauty of having a token that runs this is that, one, you can leverage a network effect. So you can have essentially owner operators. It gives people an incentive to be a part of your technology, to be a part of your platform. Also, it incentivizes, if it's an open source project, it incentivizes engineers to secure your network, to donate their time for that network, because they own a piece of it, because they have a part of it. So the white paper is really important. The white paper is part business plan, it's part technology description. If it's a securities token, then your white paper is going to be something like an offering memorandum or a prospectus. It's really important that you put a lot of thought into the white paper. It's really important that you are very clear and you articulate what it is that you're going to be doing, how long you expect it to take, the challenges, the things that you see could prevent you from getting through this, as well as defining what the opportunity is. And I've seen some really long white papers out there. I'd like to drive home the point that the Bitcoin white paper that Satoshi wrote that started this revolution was 9 pages long. Watson and Crick described the double helix of our DNA cells in a 2-page paper. So keep that in mind when you're writing a white paper. Brevity is very important. Say what you need to say it in as few words as possible and no less. And you don't need a 100-page white paper. If you're at 50 pages, you cut it in half and then cut it in half again. Boil it down to the essence of what it is that you're doing. If you can't boil it down, if you can't simplify it, if you can't convey your message in a short amount of real estate, then you need to keep working on your project. Now, I get that there's some technical tokens out there that it's best to provide a lot of detail, but in general, shorter is better, and say it safely. So you can launch a ICO with a white paper, a smart contract, and then you gotta sell the token. Now,
the token sales mechanism is super important because there is a lot of risk in doing this. There are a lot of bad actors out there who want to take advantage of your fundraising mechanism. There are phishing scams out there. There are people who will try to take a hold of your website and will change the address that you're supposed to send the Ether or Bitcoin to. There are people who will do all sorts of nefarious activity to try to subvert your token sale and take the funds that are intended for you to launch your project. So having a token sales mechanism that's battle tested, that does not have vulnerabilities, that isn't going to lock up or lose your funds, it is of utmost importance. I mean, if you launch a large token sale and the funds disappear, not only is that just going to plummet your projects into the depths of the ocean, but it's also going to open you up to liability of, you're going to lose your reputation. And so having a token sales mechanism that has been battle tested is super important. Now, launching the ICO is much more complex today than it was 6 or 8 months ago. There are probably 10,000 ICOs going on right now, just an absolute plethora of ICOs. Some really interesting projects, some not so interesting projects, some scams. There is a wide spectrum. So you really need to have a way to get your message out, to be the signal in the noise. If you're doing something and it's really interesting and it's really going to change the world and you really believe in it, you really have to do a lot of PR and marketing. So it's kind of like a new form of a roadshow, right? And I mean that in the form of going to conferences, making sure that you're speaking on panels, making sure that you are taking the traditional route and talking to family offices and high net worth individuals and VC funds and crypto hedge funds that specialize in this. So you've got to be able to, one, tell your story. You two have to be able to get your message out. You got to make sure that you're in front of the right people. If you can get articles in the crypto publications, if you can get journalists to write about you, if you can do all these things, then it's going to increase the likelihood of success substantially. I think that really should go without saying, but working with professionals that know how to do this and know how to efficiently use marketing dollars to get a message out is super important. The other thing that you need to take into consideration is rules around selling. If you're doing a security, this is why it goes back to you need legal advice. You need a lawyer to tell you that what you're doing is okay. Because if you are doing something and it turns out that you thought it was a utility, but it turned in the eyes of the regulators and you've been doing all these things that violate securities law, then you're opening yourself up to liability. I can't stress this point enough that you really need to have good, strong legal counsel, especially when it comes to PR and marketing, especially when it comes to the white paper, making sure that you're saying the right things. Other thing that you should take into consideration is escrow. So this is an investor protection mechanism. People really like to see that you can't just run away with 10, 20, 30, $40 million worth of Bitcoin and Ether. This is a backstop. And if you're really confident in your project and your ability to deliver, then this should be a no-brainer for you. When I see a project and it uses escrow, what I think to myself is, okay, these guys are, one, they don't have the ability to, or these guys and women, one, don't have the ability to run away with the funds. Two is that if the project fails, I'm not going to lose 100% of the money that I put into this. And it really shows a level of confidence in the project. Escrow can be done in several ways. You can do escrow through trusted members of the blockchain community. This is something that we help make introductions for. So these are people who are very well known. They're very well respected. They know how to do a couple of things. They know how to, one, verify that a code has been written and a milestone has been met. And two, they know how to secure crypto. Now, typically you do a 3 of 5 multi-sig wallet so that there are 5 people who can, there's 5 keys. Any 3 of them can release the next set of funds. And if one person dies or goes missing or goes rogue, then you can reset the whole scheme with the others. But as long as these as long as these agents are independent, then you really have a good mechanism in place. And I think that this is really an important part of the ecosystem that we need to all embrace, and it'll help the entire ecosystem grow more healthy. You can also do smart contract escrow, so you can release funds based on time. You can also, as I mentioned before, around the vesting schedules, you can pre-write the vesting schedules into the smart contract so that the founders have an incentive to stay on for the long haul. You can also, I saw an interesting around giving voting rights to all the token holders to decide whether or not a milestone has been met. And everybody who has a token can vote and release the next tranche of funding. One potential downside that I see to that is that your competitor could buy up all your tokens and just keep voting no. So there's some things that you got to work on, think about in that mechanism. But smart contract escrow, multi-sig escrow, really, really helpful thing to have. And then another part is that you need to be able to get the token listed on an exchange. This is actually why we built orderbooks.io initially, is that part of our service was helping get our clients' tokens listed on exchanges, and it is a really difficult process. The exchanges are just inundated with tokens that, because there's so many ongoing ICOs, they're getting 100 requests a day for somebody to list their token. It takes a very long time. Can be very time consuming. Everybody has different parameters, very little quality control on this. But people, if you're building a utility token platform, in order for the platform to function, there needs to be a way for that token to exchange hands. That's the whole idea of it. So it's very important that you have some way for people to buy and sell the token. And you should take this into consideration before you launch your token sale. Some other things that you should take into consideration include the tokenomics, right? This is very important, and there's a lot of theories, and there's a lot of research, and there's a lot of papers on this, and it's a very interesting subject. Tokenomics, of course, being the monetary policy of the token, which I hit on earlier. Can you reissue the token? Is 100% of the token created at the moment of genesis? Is there some type of algorithm that will issue a token based on specific behavior? Is the token going to be deflationary? You're going to burn the token after the ICO. Are you going to burn any unsold tokens? All of these things, there's no one size fits all. Every project is different. Every project needs to be evaluated and needs to be looked at. And these questions need to be asked. And it really helps to have advisors who have seen a lot of white papers, who have participated in a lot of projects, and can help guide through, make the wrong decision, right? Another question is, like, if you're going to sell 100% of the tokens at this token sale, what happens if you need to do a follow-on round? What is your revenue model? How are you going to make money in this? Do you need to get to profitability after this ICO? Or are you going to have an avenue to issue more tokens, right? It depends on what you say in the initial white paper. Most companies don't go from zero to being publicly traded on one round of funding. There's usually multiple rounds, and so you need to think about this. Another important piece is governance. There is a real lack of governance in this ecosystem right now, and that's going to change. Only ICOs that are well thought out, have backstops in place, have the types of vesting schedules that are more similar to traditional startups, that are able to provide a certain level of transparency around what the token is going to be used for, where the money is going to be spent. All of these things, you need to think about the governance and disclosures. And as we get into a more and more competitive fundraising environment, the projects that have these types of things that are well thought out, well articulated, are going to rise up. And this is what the larger funds are looking for. They're looking for these types of boxes to be checked. So don't do it like an amateur. On that note, another thing that I have found is that the team behind the project is the first question that I get asked about any project. Who's behind it? What have they done before? Does this story make sense? If they're able to raise the money that they want to raise, how likely is it that they're going to be able to deliver on it based on indicators like what they've done before. Now, look, Mark Zuckerberg, his first startup, of course, was Facebook, right? So it's not always an indicator of if you've had a successful company previously. That's not what I'm saying. But what I'm saying is that if you're going into the real estate industry, for example, then you need to have some real estate experts on your board. And this seems very simplistic, but you would be amazed at how many people and how many companies and how many tokens, projects don't take this into consideration. You also need to think about what your goals are, and you need to articulate what your goals are, goals and milestones, because this is how the funds are going to be released to you, unless you just set it up as we're gonna take it all, right? If we look at the slow train wreck that has become Tezos and all the drama that's going on around that, that is a great example of governance and milestones and team all gone wrong. So I would strongly encourage you to not only look at the very successful ones. Of course, they're one of the most successful raises of all time. You can't deny that. You can't take that away from them. But the execution post raise has been less than stellar. So some frequently asked questions that I get: how long does the process take? The answer is that, first off, it really depends. It depends on where you are, how much work you've done, whether or not you want to launch as a pre-functional utility token, or you want the token to work and you want to launch it as a utility token. Typically, get through the process in 4 months. The first couple of months are around setting up the landing page, getting the legal documents in place, getting the white paper to a polished and finished place, making sure that everything is where it needs to be, getting the marketing message honed in, setting up the PR schedule, and then you need about a 30-day window at least to promote the project, doing banner advertisements, doing AdWords, doing media buying, doing press releases, going to crypto conferences, applying to speak. You should absolutely be applying to speak. And if you can't apply to speak, if you apply to speak, don't get a position on the panel, then you should still go to the conference and you should meet people. You should shake hands, kiss babies, do this whole thing. This is you need to be available. You also need to have somebody who manages social media. Yes, somebody says you need at least 3 months marketing with legal disclaimers. So the amount of time that you take for marketing, the projects that have a longer period of marketing absolutely do tend to do better. So from there, the token sale itself is on average 30 days, depending on how you structure it. If you put a cap on it, which I do always recommend putting a cap on it, then it can go much more quickly. We've seen token sales close in less than a minute. We've seen token sales like EOS that are going on for months and months at a time. Again, it's not one size fits all. My thinking on the cap is that one, nobody really needs $200 million pre-product to launch something. Two is that if you sell 100% of the demand in the market, then what's going to happen to the token price? It's probably going to plummet. Everybody who wanted it got it. So now all you have is sellers. It seems like there's some supply and demand economics that should be taken into consideration there. In terms of costs, PR and marketing is the biggest costs, and you can spend $100,000 on PR and marketing at least. Legal is a big cost. It can cost $100,000, depending on where you set up. One of the questions is about where you should register. There's, it depends. It depends on where you are. It depends on the tax implications. It depends on a number of things. I will tell you that commonalities that I see include a lot of projects incorporated in Singapore. The Monetary Authority of Singapore recently came out with guidance on how they view tokens. They do view utility tokens as not securities, according to the document that they recently came out with just a few days ago. But they do also view certain tokens as securities. And really, you need a lawyer to tell you where your token lies in that. They're the only ones who are qualified to do that. But having several $100,000 is what you should expect to spend. What a lot of projects do is that they will come in and they'll do the minimum. They'll get their white paper done. They'll issue the token on the blockchain, and really from there, and set up a landing page. And then from there, it's just going out and hustling getting the first angel, getting the first whale, getting the first large contribution to your token sale, and then rolling that into a much more public PR and marketing cost. You don't necessarily have to be a blockchain company in order to do an ICO, although I will say that the crypto market in general favor blockchain companies, does favor utility tokens. We haven't seen a whole lot of non-blockchain companies who are strictly fundraising, selling equity. It hasn't become a significant crowdfunding mechanism yet. I do think that we will get there, but I think that the institutional money, which is still really on the sidelines, will have to come into this market in a large way before we see just traditional startups that have nothing to do with blockchain using this exclusively as a fundraising mechanism. That's my personal opinion. That's the majority of what I have. I'm going to scroll through the questions. If you have questions, please do put them in here. This is my contact information. Can you talk about Ambisafe's post-ICO token management initiative and token accounting? So post-ICO token management, can you elaborate a little bit on what you're looking for there? We're not that involved in managing the token after the ICO unless we've been retained to help deliver on some of the promises in the white paper. So we do have full stack engineers. We do have some of the best smart contract engineers in the world and Solidity engineers. And so we'll be able to help deliver on some of the promises in the white paper. As I like to say, we're not going to be the CTO for a project. You need to have that in-house, but we can be your engineering staff and do a custom scope of work. I'm not sure if that's the management initiative that you're talking about. If you're talking about providing liquidity for the token post-ICO, that's not something that we typically do. And token accounting, I'm not sure I completely understand what you're looking for there. What other questions can I answer for you in our last couple of minutes? Is Ambisafe a consulting company or an incubator? So we're kind of both. We are more of a consulting company right now than we are an incubator. I think of incubators as bringing companies into the four walls. Our intention is to move in that direction where we will bring companies into our space and we can help build the companies. Currently, we're kind of at capacity of our existing office space, which is why we haven't done it. But we do help companies through the process. So we are a lot like an incubator. And we are going to be launching an ICO for orderbook.io. That's going to be coming over the next 6 weeks. We just announced it, I think, yesterday. The CEO of Orderbook announced it. And so it will be a security token. You will have to go through the KYC, AML accreditation verification, but it's going to be, we will be doing that. Do you work with different growth teams on different ICOs? Yes, we have worked with other teams that some firms specialize in fundraising, some firms specialize in PR. We're happy to work with other teams and bring them into the fold for the success of a project. We do typically get paid up front. We get paid up front for our services to keep the lights on. We're in the process of building out a fund that will help to cover some of the initial costs, but currently we do charge up front and we do take a percentage of the tokens, assuming that it's not a security. If it's a security, then we don't take a percentage of the tokens and we don't take a success fee. We just take a fixed payment. There seems to be a lot of confusion in ICOs. What makes a security and the legal ramifications around that? Thanks for trying to make sure it's all understood. You're very welcome. Christina is coming up next, I believe, and she'll be able to provide a lot more legal clarification on that. It's very important that you do understand the difference between these two. How's there liquidity in a security token? Liquidity is, you have to essentially have accredited investors or institutional investors that are willing to buy it. So it's a secondary market for a token. Now, some interesting things. So I have this side project. The Ferry Building in San Francisco is for sale. Blackstone is selling it. It's going to be like $280 or $300 million. I would like to launch an ICO to try to buy the Ferry Building. I think that the community would support it and we could do something really interesting there. My approach for that is to create a special purpose vehicle in Delaware and sell the ownership of the SPV in an ICO. If the threshold amount, the purchase amount gets met, then the purchase would be made. If it doesn't get met, then all the money would get sent back to everybody who contributed. And if the purchase amount is met, then the title, the ownership of that SPV. Again, the title has to be registered at the county recorder's office. So what you're doing is that you're essentially taking that asset, you're putting it into an SPV, and then you can tokenize that SPV. So the reason why I'm talking about this is because now you're creating a liquid instrument for an asset like a piece of real estate where you didn't really have that before. Another example of that is blockchain capital. VC funds typically have 5 to 7 year lockup periods. Now we're seeing that you can tokenize these assets and you can create a secondary market for them. The Ferry Building is for sale. Yeah, it's they announced it over the summer, and it's not officially on the market yet, but that is going to happen. So the idea of the Ferry Building being for sale is, one, I would put an incubator there. That's one thing that we would do with it. Two is that it's an interesting use case in that it's a commercial property. So as the building generates revenue, you can convert those dollars into Ether and then pay the Ether through a smart contract directly to the token holder's wallet using the same dividend paying mechanism that we built for TaaS.fund. It would be a very interesting use case and something that I get excited about as being able to get the entire community involved in a really fun project. So we'll keep you cool. Thank you. Thanks for the positive encouragement there. Hacker House Building, actually crypto. Feel free to get in touch if you have a project you'd like for us to look at. Feel free to reach out. Thank you all.